Investor Peter Thiel, who's Valar Ventures, is doubling down on crypto with its Series B investment in crypto wealth management company Blockfi. And the founder and CEO of that company, Zac Prince, joins us at Post 9. Welcome, Zac.
Hey, thanks for having me.
So Blockfi does what? You're trying to do traditional banking for crypto? How does that work?
That's exactly right. So Blockfi builds financial services products for crypto investors. And today we have three products that are live. One is an interest account where you can earn 5% interest on your Bitcoin, 8.6% interest on your stable coins, and we also support Ether and Litecoin, which are in the top 5 by market cap, but don't have as much market share as Bitcoin. We were the first company in the space to offer loans to individuals that own cryptocurrency, similar to what you're able to do when you're borrowing against a portfolio of stocks, except with Bitcoin and Ether and other crypto assets as collateral. And our most recent product that we launched in December is the ability to buy and sell cryptocurrency for no fees whatsoever, moving it closer to the traditional equities market where trading is largely free, which we launched in December.
So I think that sounds appealing, to put my Bitcoin with you and then get a pretty high interest on that. But is it safe? I mean, are you regulated? How do I know that the money is safe?
Yeah, great question. So we're regulated like traditional fintech companies. So Square, for example, SoFi, for example. We have a money services business registration at the federal level and lending licenses and money transmission licenses at the state level. There is more risk here versus a savings account with FDIC insurance or a traditional brokerage account with SIPC insurance, but you're compensated for it with the high yields. And throughout our entire history as a company, we've never lost a penny across any of the lending activities that we do.
I was going to say, what's the delinquency rate on something like that? Isn't it dangerous?
It's zero. So if you look at securities-backed lending, margin lending, and public equities, which is what's most comparable to what we're doing, number one, you're always getting liquid collateral when you're making a loan to someone else. So we might lend you 50 cents for your dollar of Bitcoin that we custody and hold throughout the duration of the loan. And then we have a proprietary risk management system that automates the notifications for margin calls and the liquidation of assets in the scenario where there's volatility in a direction that requires us to take those actions.
Why do I need loans in Bitcoin if you can't buy really anything in Bitcoin?
Well, it's an investment asset. So I think there's this misconception because of the term cryptocurrency that the use case for Bitcoin is people spending it. Actually, it was the best performing asset of the last decade in terms of investment returns. And most people in the US aren't buying it because they want to spend it. They're buying it because the price goes up. And so one of the things that happens if you bought Bitcoin at 1,000 and now it's 10,000, for example, is if you sell it, you have to pay taxes on a $9,000 gain. A loan from Blockfi enables you to get liquidity without selling your Bitcoin, so you still hold the potential future upside in that position, and you have extra cash that you can use to make other investments, pay down higher cost debt, start a business, etc.